right? Once again, these are the transactions that we come across when we are accounting for the bills of exchange. And if you're writing the entries in the books of drawer, this is how you had to write. Okay, but if you're writing in the books of drawee, this is how you have to write. This is the treatment that you have to give for these transactions. Okay, for these transactions. Right. Now, look at this. When the bill is drawn and accepted, bill receivable account debit to drawee's account in the books of drawer. Whereas in the drawee, drawer's account to bills payable. For the drawee, whatever amount that is payable is a bill payable for the goods that he has purchased, right? And for him, it's a bill receivable. Bill receivable is debited, bill payable is credited. Look at this contrast, right? Here you have written drawee and here you have written drawer. The drawer is debited in drawee's books. The drawee is debited in drawer's book. Bill receivable is what return which is debited in drawer's book. Bill payable is credited in drawee's book, right? Please remember this contrast. Okay, carefully. When the bill is duly honored on maturity, bank account debit to bill receivable account. Okay, when the bill is duly honored on maturity, honored means it is paid, the amount is paid. Bank account debit to bill receivable account, right? In the books of drawer, in the books of drawee, bill payable account debit to bank account. Now here it is bank to bill receivable, here it is bill payable to bank. Okay, for the drawee, bill payable. For the drawer, it is bill receivable, right? Okay, when it is due, this is the entry you're writing. When it is paid, the bill receivable is credited. When it is due, bill payable was credited. When it is paid, bill payable is debited. That's what the thing that you have to observe. Right. When the bill is endorsed to a creditor, right, you are owing money to others and it is endorsed and given to him, right? If that is the case, endorse his account debit to bill receivable account. You don't need to do anything in the books of drawee. That is, that's not his headache to know. Therefore, he doesn't make any entry here. Okay, so only in the books of drawer. Endorse his account debit to bill receivable account when it is endorsed. When the bill is discounted with the bank to bill receivable. Okay, and discount to bank. Now you can make a composite entry like this. The composite entry of these two entries is, okay, bank account debit, discount account debit to bill receivable account. For example, if the bill is for 10,000 and it is discounted at 10%, okay, 1,000 is the discount, right? So against bill receivable, you are writing here 10,000. Against the discount in the debit column, you will write 1,000. And against bank account in the debit column, you'll write 9,000. 9,000 plus 1,000 of discount. Okay, together 10,000 is on the bill receivable. The amount to be discounted. Okay, right. Then when the bill is sent to bank for collection and the bill is duly collected, okay, the entry is when it is sent, one entry, and when it is collected, another entry. Okay, when it is sent, bill for collection account debit to bill receivable account. Okay, when it is collected, bank to bill collection account. Look at this. In all these scenarios, you're not making any entries in the drawee's books. Why? Because that's immaterial for him. The drawee has nothing to do with that, with the transactions of the drawer. Okay, drawee is the debtor, drawer is the creditor. He is the supplier of the materials and he is the receiver of the material. Okay, when the bill is retired, before maturity, okay, bank account debit to discount on bills. Okay, bank account debit to discount on bills. Okay, to bill receivable. Now this is, yeah, this is, yeah, it is retired even before the maturity. Okay, So bank to discount to bill receivable account. This is the rebate that you're giving. In the books of the debtor, the draw E, bill payable account debit to bank to discount. It is reverse. Bank discount to receivable. Payable to bank to discount. Okay, so this is reverse. Next, when the bill is dishonored, okay, when the bill is dishonored, if retained by the drawer till maturity, okay, and after that maturity date, if it is dishonored, when he goes and presents, okay, when he went there and presents, okay, and the amount is not paid to him, right? Draw is account debit to bill receivable account if it is retained till the maturity, right? The same is entered as bill payable account debit to drawer account in the books of draw E. Okay, bill payable to drawer. Draw E to bill receivable. Draw E to bill receivable. If discounted with the bank, okay, if discounted with the bank, draw E's account debit to bank. Okay, bill payable to drawer. Right? If endorsed to a creditor, draw E's account to endorsee, and here it is bill payable to drawer. Okay. And if there are any noting charges, in the previous problem we have seen the noting charges. Okay. Yeah, if it is sent for collection, draw E to bill collection, and the entry in the books of draw E is bill payable to drawers. When noting charges are noticed in the problem, then if it is paid by the drawer, draw E's account debit to bank. Okay, in the books of drawer. If it is paid by the endorsee, draw E to endorsee. And same transaction is given with a similar, with a different treatment in the books of draw E. In the books of draw E, the entry is noting charges debit to drawer. Draw E to bank. Noting charges debit to drawer in the books of draw E. And noting charges to drawer, right? Whom it is endorsed, that is immaterial for the draw E, right? Now, when the bill is renewed for a further period, extended, okay, extended for cancellation of the old bill, draw E to bill receivable. Let's say 3 months bill is given initially, okay, another 3 months is to be extended, okay, the old bill has to be cancelled, then a new bill is created. That's the meaning here. For cancellation of the old bill, draw E to bill receivable, okay, in the books of drawer, but in the books of draw E, okay, bill payable to drawer's account. For the interest on the extended period, draw E's account debit to interest in the books of drawer, okay, but in the books of draw E, interest account debit to drawer, okay. And for drawing the new bill, bill receivable to draw E's account, drawer to bill payable account, okay, just as we have done in the beginning, a fresh bill, okay. Where is that? Yeah. Yeah. Bill receivable to draw E, drawer to bill payable. Okay, a fresh similar transaction you can see here. Okay, where is this? Sorry. Okay, that's it. So these are the entries for
1st Jan 2013. Mohan drew a bill for 3 months on Sohan, who accepted the same. Pass necessary journal entries in the books of Mohan and Sohan in following situations. The bill is retained by Mohan till 31st March and Sohan paid it on that day upon presentation. Continue, sir.
Continue.
Bill is discounted with the bank and the bank pays 49,000 rupees to Mohan. Sohan paid the bill on due date. Mohan endorsed the bill to Rohan, his creditor, in settlement of his claim for 51,000. The bill is settled on the due date. Mohan sent the bill to the bank for collection on due date. The bank collected bill amount and after deducting collection charges of 100 rupees paid the balance to Mohan.
Great. Okay, there are four scenarios given here. Okay, now for each scenario, he is asking us to pass the journal entries. Okay, in line with these, model journal entries that are given. In light of these journal entries, right? These are the journal entries. Okay, he is asking us to fit those situations, right? He's asking us to fit those situation scenarios into those journal entries. Okay, right. So these are the four situations. The bill is retained till maturity. The bill is discounted with the bank. The bill is endorsed to Rohan. Okay, and it is sent for bank. Okay, for collection. Right, and there is a there are some charges, bank collection charges. Right. Okay, look at this. Scenario one, on getting Sohan's acceptance. Okay, this is the first thing. Bill receivable to Sohan. Bill receivable to Sohan. Where in the books of Mohan. Who is Mohan? Mohan is a creditor. Mohan is a creditor, right? Okay, Mohan is a drawer, right? Yes, sir.
Yes, sir.
Mohan is a drawer in the books of drawer. Okay, so if nothing is mentioned, there's no name given, then you can write drawer. When the name is given, you have to write name. Okay, so therefore we have written name. Fine. On getting the acceptance, the bill is drawn and got the acceptance from Sohan, so therefore it becomes a bill as long as the drawee doesn't sign or put his give his accent or consent. Okay, give his acceptance or consent, then that does not become a bill. It is just a piece of paper. Once what is written on the paper is being accepted by the uh, drawee, the debtor, then it becomes a bill. Okay. On getting Sohan's acceptance, it becomes the bill. Bill receivable account debit to Sohan's account. To Sohan's account. Okay, being bill accepted by Sohan. For how much? 50,000 is the worth of goods he has purchased, and to that extent he has given his acceptance. To that extent, the bill, the document, the chit, the slip becomes a bill. It becomes a negotiable instrument. Okay, then on payment, okay, when it is drawn, okay, Mohan sold goods on 31st January. Okay, and yeah, the bill is retained by Mohan till 31st March. Okay, retained. And this is for 3 months. The bill is for 3 months. Look at this. Mohan drew a bill for 3 months. The tenure is 3 months. Okay, tenure is 3 months. After 3 months, the bill gets mature. Right? For how much? For 50,000. Fine. Then after 3 months, the payment is made. To whom? To Rohan. I'm sorry, to Mohan. What is this? He retains. The scenario here is the bill is retained by Mohan. It is retained by the creditor or the drawer. So as he retains on the maturity, he gets the payment from Sohan. Okay. So therefore, the entry is bank account debit to bill receivable account. Now, actually, uh, yeah, when you have written here bill receivable to Sohan, actually our account is debited and Sohan account is credited. But in our account, we don't write our name, okay, but we write the form through which this benefit is received. It is coming through bill receivable, okay, bill receivable. So therefore, bill receivable is debited and the party who is giving is credited. Fine. When the payment is made, the cash comes in there, therefore, cash comes into bank account is debited. And two, how it is coming. The bill is realized into cash. Okay, it is coming through bill receivable, 50,000 rupees, 50,000, 50,000 rupees. Okay, so you will write the narration being bill accepted by Sohan for the first transaction, being the payment received against bill receivable. Okay, now scenario two, bill is discounted with bank. Bill is discounted with bank, and bank pays 49,000 to Mohan. For how much it is discounted? For 1,000 rupees it is discounted. Okay, Sohan paid the bill on due date. It is on or after due date. Okay. So what is the entry, or what are the entries in the books of Mohan? In the books of Mohan, the drawer. When bill is discounted by Mohan, okay, on getting Sohan, this is same bill receivable to Sohan, okay. Then on discounting, this is a new thing. On discounting, bank account debit 49,000, discount account debit 1,000 to bill receivable account. Okay, the total value of the bill is 50,000, and which is discounted with 1,000 with the banker, and 49,000 is the amount received. You received an amount of 49,000 into your bank account, and the banker took a concession, what we call discount of 1,000. So therefore, bank account debit 49,000, discount account debit 1,000 to bill receivable, which is total amount. So being Sohan's acceptance discount, being bill discounted. It is not Sohan's acceptance, but being bill discounted with the bank. Okay, remove this highlighted one. Being bill discounted with the bank. Being bill discounted with the bank. Okay. Then on the date of maturity, okay, on the date of maturity, as the bill is settled by Sohan to bank, there will be no entry. Once the bill is discharged and the main, amount is paid, there's no amount entry needed to be returned. Okay. Next is third scenario. Mohan endorsed the bill to Rohan. Okay. Okay. Mohan also has a creditor. The creditor of Sohan is Mohan. The creditor of Mohan is Rohan. Okay. So he is endorsing the bill to Rohan. Yeah, I don't have money now, but I have a bill which I got it from my debtor. Okay, you can take this bill and collect it on maturity. And saying that, he gives up to Rohan with his signature. That's called endorse. Okay, the bill is endorsed to Rohan. Okay, to his creditor in settlement of his claim for 51,000. 51,000. This bill is settled on the due date. Okay, look at this one. Actually, Mohan has to pay 51,000, but this is settled for 50,000. The bill that he has given is only 50,000 worth. Okay, but he has to pay 51,000. Rohan has to receive 51,000 from Mohan. But Mohan says, I don't have money, but I have a bill worth 50,000. If you want, you can take it. And that bill of 50,000 is taken and the settlement is done. Okay, right? Mohan need not pay anything to Rohan. Rohan need not receive anything from Mohan. Okay, that means Rohan compromised with this 1,000 rupees that he has to receive. Okay, right. Let's look at that in the form of entry. The bill is endorsed to Rohan by Mohan. Okay, the bill is endorsed. On getting Sohan's acceptance, okay, this is there already. Okay, this is repeated. Now, on endorsement, a Rohan account debit. Rohan is supposed to receive 51,000, but he got a bill of 50,000 from Mohan. So therefore, to bill receivable 50,000, and the remaining 1,000 is compromised as if Rohan gave a discount to Mohan. Okay, Mohan got a benefit of 1,000 and Rohan gave a benefit of 1,000. Rohan he got compromised. Anyway, I'm getting 50,000 instead of 51,000. Let me give 1,000 discount to him because he's giving me immediately. So 1,000 is discount that is given by Rohan. And the narration being bill receivable endorsed to Rohan and discount availed, right? And there's no wrong here. Okay, next is fourth scenario. Mohan sent the bill to bank for collection on due date. Okay, and the bank collected this bill, and after deducting the collection charges, 1,000 paid the balance to Mohan. Look at this scenario. Fourth scenario. Bill is sent for collection to bank by Mohan. Okay, this is saying, okay, the first one is static in all the scenarios. Let's look at on sending the bill for collection account debit to bill receivable 50,000, 50,000. When you're sending 50,000 is accounted, bill for collection 50,000 to bill receivable account. When the payment is received from the bank on the bill, okay, then bank says that the entry is, yeah, bank says I had to, I had to get some commission or charge. Okay, that charge to get the collection is, okay, 1,000. What happens is he gives the bill to the banker. The banker collects on the behalf of the drawer. It is not discounting. Please remember, it is not discounting. If it is discounting here, then he will discount it. It is not discounting. The trader doesn't have so much time to collect the money. Okay, he gives that bill to banker and says, please collect this money and deposit in my account, credit it to my account. The banker takes that amount and collects the amount from the debtor of this Mohan. Okay, it is to be collected from Sohan. Okay, right. Bank account debit 49,900, and for 50,000 he is charging 1,000 as his service charge, a collection charge. Remaining amount is credited. 49,900 is credited in the account of Mohan. Bank account debit to bank account debit, collection charges account debit to bill collection. Okay, 50,000, 50,000, right? Uh, yeah. On acceptance of the bill drawn by Mohan, Mohan's account debit to bill payable account. I'm sorry, this is in the books of Sohan. On acceptance, Mohan to bill payable. On payment, bill payable to bank. That's it. Right, Mo? That's the end of solution. Okay, this is which is for 12 marks. Look at this, we didn't do anything. I've just shown you the entries. I've shown you the entries and we took the data and just substituted there. Okay, this data we have substituted in the entries we have taken. Right. This data we have fit there in the journal entries. Right. So this is for 12 marks again. This is for 12 marks.